A very good morning to everyone here. I'd like to welcome us to Rally Trade Morning Market Review. So welcome to a new month. Actually, yesterday was the first, but today is, most of us didn't trade yesterday. I'm sure of that, but I'm sure a lot of persons are going to resume their trading today. So welcome once again to Rally Academy. So I'd like to start now, but wait for a few persons. Please let me have everybody on mute. Once you come into this call, please mute yourself. Thank you. Okay. All right. So let's just start this by 8:05. 8:05, we'll start the morning market review. So I wouldn't be going back and forth, back and forth. When people just come in, they start asking a lot of questions. So just 8:05, we're going to start officially. All right. Thank you. Good morning. Thank you for your patience. All right, good morning once again. So I guess we have to start the call now. So those who came late, well, thank God this is being live streamed right now on YouTube. So you can as well go back to YouTube to watch the replay in case anything has been missed, okay? So let's look at what the market is trying to do today. So as a trader, what I look out for is the possibility of buying and selling. Now, for me to make profit, I need to know exactly when to buy and exactly when to sell. The specific place or area or zone for me to buy or sell is very important, as well as the timing also is very, very important, because I believe most of us here are traders. By day traders, I mean you want to place your trade, today, make your profit today, possibly in a few seconds, few minutes, or few hours, and you're good to go, right? So that being the case, precision, accuracy is very important. Now, the market moves a lot. It moves a lot, tries to escape. But you see, there are certain rules that the market obeys. There are certain laws that it obeys most often than not, right? There are certain moves the market obeys most often than not. So what I'm going to be doing with us this morning is basically not just giving us fish, so to say, but teaching us how to catch the fish. Now, if you can understand how the market moves, then you'll be able to possibly two things: either predict the next move of the market, or you wait for the market to make that move and you make the counter move. Okay, or you join the market move. Like what I'm saying is predict the market move. That means you want to predict it's going to go in this direction. If I see X, Y, Z, then I join, right? Based on how the nature of the market, the way it moves, or I want the market to do this, so I will do that. So two ways. Some persons try to predict the market and flow with it. Others try to react to the market. There are two things now. Some persons try to predict the market and flow with their predictions. Please, once you're on this call, I'd like you to jump. Please be on mute. Okay. Mute everyone again. Now, I'm sure you are getting my explanation. Please, if you are getting my explanation, I would like to know if you are with me. You can type a yes on the chat box so I can know you. And if you're not getting my explanation, you can as well type in. Okay, good. Thank you so much. Thank you. All right. So, yes, I'm saying that two persons, some try to predict the market. Oh, price is going to go up. Let me buy. Or price is going to go down from here. Let me sell. Or some way, okay, if price gets to this place, if it starts going down, then I will go down with it. If price gets here, if it starts going up, then I'll go up with it. All right. So that means you are reacting now to what the market is doing. So yours is once the market does this, this is how I'm going to attack the market. All right. So two persons in the market, one predicts, others react. So which one are you going to be? Right. So now let's look at thank you very much, Sobandi Wasim. All right, so let's look at the market. For instance, I want to start with the fundamentals. Now, we all know that fundamentals, or for those who don't know, fundamentals are majorly economic events, all right, socio-economic events, political events, majorly all those news that can alter the delicate balance between demand and supply, right? All those economic news. Now, most of the time, more often than not, we have data that alters demand and supply. That means those data point us to a particular direction. They help us to do one of two things, either buy or sell. Now, the major people who makes the market move for these fundamentals, we have the investors, right? The big players in the market. Fundamentals help those guys to bring more money into the market or channel their money into a particular aspect of the market. Now, me and you, we are retail traders. We are the lower part of the food chain. What we are trying to do is to immediately the market wants to react. We just want to get in and get out of the market, right? To maximize profitability, even with little move. So investors stay long term. We retail traders will stay just for a short term. Now, the investors are the main players of the market who allows the market to, because of the volume of money they bring into the market, over time, market keeps moving. So one of the importance of fundamental is it brings big players into the market and allows the market to become very liquid. So market keeps moving, which is good for us, right? Now, fundamentals can alter the delicate balance between demand and supply. Hence, we need to pay attention to it. So anytime you see, this is forexfactory.com. Now, these are the major news that are going to be happening today. You can see today is Tuesday, April 2nd. So currently, all right, we have four types of news. We have the non-economic, we have the low impact, we have the medium impact, and we have the high impact. Now, the low impact or non-economic are white. Now, so for example, we don't have any envelope with white here. Second is low impact news, which are of the yellow envelope. So we have a lot of low impact news for today, a lot of them. Now, the third is the brown envelope, which is the medium impact. That means it can affect the market, but not too much, all right? Just a little. So we can have Australian dollar as at 1:30 a.m. We had a medium impact news monetary policy minute meeting. Now, this is not a data news, hence we don't have any data here. But all day we are going to be having euro from the Eurozones, rather, the German prelim CPI, that is consumer price index. Now we have two CPIs. We have the prelim and we have the final. This is the prelim. Now, Germany is, it's a wide economy. The euro is not just controlled only by Germany. We have Germany, Italy, Spain, France, and a whole lot of other countries in the eurozone. But Germany is one of the major players over there. So we are expecting the inflation data, that's CPI data for Germany. Now, this data comes from 6 states in Germany, 6 states. All right. So all day, these data are going to be sent. So we might see some movement from euro for today, depending on how the data play out. Now, we might not really see, there's no specific time for us to see the outcome here. Anytime, like I said, all day, right? So then, lastly, we are focused on the red envelope, which are the high impact. We have also the job lots opening for the US. That means number of job openings for a specific month. So we are looking at the month of March. Now, by 3 p.m., this data is going to come out. So it will help us to know if we are buying or selling or if dollar is going to be strong or not. So for now, these are the two major news we have. So yeah, FOMC around 5 or 5 p.m., but this is not going to be too major. So we are looking out for Euro all day as well as the USD by 3 p.m. Now, but the most consistent aspect of trading is the charts, which is the technical side of trading, technical analysis. Now, if you can see my charts, please drop a yes on the chat box. If you can see my charts, please drop a yes on the chat box. Okay. All right. Thank you. So let's proceed then. Now, this is oil, first of all, this oil. And based on oil, let me take out all of this. Okay. So my chart is going to be wide enough for good analysis. Now, like I said, I want to teach us a particular technique. Now, I love demand and supply so much, but you see, when it comes to demand and supply, there are a lot of imbalances in the market, a whole lot of imbalances in the market, all right? So let me show you a little technique now. Let me show you a little technique. Let me use a currency to do this. Any currency. Let me use it to do this. For instance, okay? So now at the end of the day, you are going to tell me if you expect price to go up or you expect price to go down, right? So just engage me for some few minutes. Let me show you this particular strategy, all right? Now, every time you see price moving, okay, if you see price moving, there's always a tight space between each candle. Now, this is a 1 hour time frame. Irrespective of the time frame, right? There's always a tight space between price, a tight space. That means after one candle, the next candle follows. After the candle, the next candle follows. That means where price ends, another price starts. Where price ends, another price starts, all right? If you notice that. Now, a whole lot of time also, you will also notice that I have a bearish candle, for instance, a red candle, a bearish candle, price came down. Now, after price coming down, the next candle, even though that candle is going to come down, first of all, most likely you will see price push up a little bit via the weeks. It will push up a little bit. Sometimes it might be much, sometimes it might be low, right? Push up a little bit before continuing falling. Here and there, this next candle started here, pushed up a little bit before continuing falling. All right, some can be small, some can be, now the same thing for bullish candles, either bullish or bearish. If price is going to go down, if price, let me use this for instance. Let me see if I can use this. So for instance, if price is to go down, if you want price to go down like this, This is the opening price. If price is to go down all day, before it does, price will first of all pull up first. After pulling up, right, it will leave something like a week. It will leave something like a week. Oh, I can't have this one. Sorry, I'm trying to explain something here. It goes up, all right, to this extent. After going up, before it will finally come down. So if price is going to go down all day, you won't just see price open and just start going down. No, it will pull up first before finally coming down. I don't know if you get my explanation. All right, that's going down. Now, reverse is the case. If price is going to be bullish for the day, that means price is expected to go up for the day. Immediately price opens first, you will notice that price will first of all edge downward. After going down a little, then it will stop, reverse before finally going up. It's just like somebody who wants to jump. You want to jump high. The higher you want to go, it means that you have to go down first, bend down first to gain momentum before going up, right? So if I place a buy order, that means somebody is there willing to sell to me. So I must go and look for people who are willing to sell to fulfill that buy order that I have, right? So that's what price does. If I want to buy first, I will first of all look for the sell orders, pick them up, those who wants to sell, pick them up before fulfilling my buy order, so to say, all right? So now how does this work real time using price? How does it really work? Let's take, for instance, there are two ways. First of all, you need to know what is the trend? Sorry, somebody is trying to okay, something. Zoom in, okay, in a while for sake of those of us using phone. Okay, all right, all right. I get you. I get you. I'll try and zoom in, right? Okay, so for instance, if I have a bullish move, price is bullish. Now, how do I know that price is bullish? That means the trend, not overall trend, the daily time frame trend, right? For instance, this is good. And on my daily time frame, I can see that the current trend is what? A bullish trend, right? Yeah. Thank you. Somebody says you can rotate your phone. Yeah, it helps. I think that helps. Thank you. Is it Raquel or Richard? All right. So you can rotate your phone. Now, I have on my daily time frame, I have a bullish trend. All right. It can change. For instance, here was bullish, here was bearish. Bullish, bearish, bullish, bullish, ranging, bullish again. All right. Now, it means that I am looking out for buys, isn't it? I'm looking out for buy. Now, remember the statement I made first. For price to buy, it means it wants to go up. Meanwhile, for price to go up, must first do what? Before price will go up, it must first do what? Come down. Now look at each candle. Look at each candle. Let's take this particular move here. It happened for a few days. Price kept going up from here all the way here. Let me just even take this out. All right. So once we are done, we'll now apply it to anything we want to trade, and it makes it easier for us to pinpoint what we are expecting for the day. All right. So let me zoom in into this set of candles. This set of candles. Now notice that this particular candle here, this one, is a bullish candle, means price went up overall for the day. But before it went up, guess what? It has a lower wick here, isn't it? That means price first did what? Came down or come down before finally going up. The next candle, let me see if I can. I want to zoom in so that you will see even the tiniest detail. The next candle, before going up, what happened? It came down, right? The same thing for the next candle, it came down. The same thing, the same thing. So you find this trend consistent, all right? Even when price look bearish, before price could come down, you first of all have a slight bullish upward move before coming down. Okay, I wish we had a lot. This is like a whole class. Thank you so much, Adenuga. That is exactly what I'm trying to explain, but I don't want to use bogus, language, liquidity, fair value gaps. I don't want to use all of those. I just want to simplify it. That is exactly what I'm talking about. So you get it, right? So he said when price comes down, is it coming down to peak liquidity before going up? Yes, sir. That is exactly what price is doing. So before price can go up, it needs to come down on peak liquidity before going up. And the more liquidity it has to peak downward, the possibility of it going higher. The possibility of it going higher. All right? Yes, the possibility of it going higher. What do I mean? For instance, look at this particular point here. All the way here, you have some clusters. You have clusters from here all the way here. I think I need to change the color of my, let me say, let me use this. Okay, good. Now, you see, you have some price is neither bullish here nor bearish. It's just ranging up, down, up, down, up, down, right? Now, all of this place, liquidity is gathering. Liquidity is gathering. Now, it means that once price is going to break out from either up or down, notice that the candle that broke out of this zone was a massive one. Yes. So that means once price can pick liquidity, it has the ability to travel far. Okay. So this is just one of those techniques that we use. So at the end of the day, we'll apply it to our chart, like I said. So just be patient with me to know this. Now, I remember my colleague Sam, was it Thursday or Friday, giving us the money market review. And I can remember him telling us that, look, we are not coming here to just come and just get entry points. Oh, take, buy, sell. No, not exactly. If you want that, then you will send tradings to you via your account managers. You receive tradings on your mail. You can even join our afternoon sessions where you'll be giving buy now, sell now, right? All of those things. But here, we try to make you understand. This is morning market review. We are doing some bit of analysis to be able to arrive at if we are buying or selling. So it's not every time we're just giving entry points, buy here, sell here. No, not exactly. All right, so let's take today to learn one or two techniques we can use to trade. So where were we? Now, talking about bullish momentum. That means we are expecting price to go up, isn't it? Now, let me go back to my lower time frame, my H1 now, for instance. On my H1 time frame, for each day, this was where price ended. You notice price came all the way down before pulling up, continue going up, right? Now, price ended here. Price, first of all, went up. Notice that it came all the way back down before going back up. Now, price is ranging. We are expecting price to go up, isn't it? So what we try to do is either, for instance, this is the highest point for this particular trading day, and this was the lowest point, isn't it? So most likely you are waiting for price to come to the lower point, either hit that low point, right? Either price hits that particular low point. Once price hits that low point, then we are looking at price bouncing back to the upside to continue that particular momentum. Or you look out for places where you have cluster, something like this. We have some cluster of prices around this zone, which is a lot of liquidity. So it means that the following day, when price open, it sees liquidity here. Once it picks them up, it keeps going up. Now, notice that on this following day too, the following day, a lot of liquidity cluster around here. When price open the following day, what happens? Immediately, it opened around the liquidity zone. So there's possibly no even need for it to keep coming down. There's already liquidity here. It picks it and it continues going up. Are we together? It keeps going to the upside, all right? So then this was the highest point for that price close for the day. The following day, price opened and kept going up, which is not normal. It's supposed to first of all do what? Go down, either come to this point. You can see some clusters here, right? we're expecting price to come to this point, peak liquidity before going up. So price is supposed to do this, come down, peak liquidity, and finally continue to the upside. All right. So, but we did not see that, which is not normal. So when price doesn't show us its hand, we need price to show us its hand, right? I need you to show me your hand. Once you show me your hand, I'll know if this how did they do it in betting now? I don't play bets, but if you know the card of your opponent, you most likely know how you are going to, what your next move is going to be, isn't it? You will know if you will win or if you will lose. So if the price can just show you its hand, and this is most likely price hand, price always like to come back to peak liquidity from the previous day before continuing in the direction of that trend. If price does not do that, it's risky, right? Price didn't do that. It just opened this day and just started going up straight, which is not normal. You wait for price to come back and pick liquidity first before you enter that trade. Now, notice that price came down, but did it get to our liquidity zone? No, no, no. It means what? That day is most likely the day I'll stay out of the market, right? So for those who understand trading, not every day is a perfect day to trade. So price didn't do that. Now, today, what am I expecting? What am I expecting? This was the high, all right? And this was like the low for yesterday. This was like the low point for yesterday. So basically, I can see a bit of cluster here. A bit of cluster around this zone here. You can see this cluster, right? So what it means is I am waiting for price to do what? To tap into the liquidity zone, right? Because it opens here. Remember, for it to keep going up, it needs to come down, right? Once it can tap into this zone, then what am I going to do? Then I will continue buying. So somebody might be asking, so if I know that price will need to come down first before it goes up, why don't I sell, right? Now, you don't know the pattern at which price will come down. You might not even know exactly when price will come down. So all I'm doing is, that's why I said there are two sets of persons. Some, they predict, and others, they do what? They react. So hence, I am only trying to react to what price is going to do. It means that I am predicting, okay, price needs to come all the way here. Once it can get here, what am I going to do? This is where I'm going to take my buy. What instrument is this? This is good. Now you can apply it on any chart. I don't know if you get my explanation. If you get my explanation, even if it's a bit, just type yes on the chat box. So we can now enter other charts, look out for opportunities. If you got some of my explanation, yes. And if you didn't, just type in. Okay. All right. Wow. Okay, that's good. Okay, I can see no here. Chukwebuka, no. Did you join early? I guess not. All right, I guess not. Now, the good thing is that this same review is going to be on YouTube. So at the end of the class, you can as well join YouTube. But let me explain it just one more time, briefly, before we dive into, now, what am I trying to say? I'm saying that there are two things you need to do. The first thing is to identify the direction of, let me, yes, please, can you do a little explanation on liquidity analysis? All right. Thank you. Okay. Say for instance, let me just explain it this way. Say I'm a contractor, and as a contractor, the government gave me a contract to supply 1,000 hillocks. All right, they want to share to the directors in their parastatals, 1,000 hillocks. That means a demand has been placed, right? Which is a bullish trend, price going up. Demand pushes price up. But before price can go up, I need to fulfill that order. That means it has created, demand has created the possibility for people to come and sell in the market. Now, what am I going to do is I'll start looking for companies that produce hillocks, that sells hillocks. The most profitable one for me is the one that sells. So if I see two companies, one selling, just have 50 hillocks, and another one has 500 hillocks, which one will I patronize more? The 500 hillocks, right? So it helps me to pick up my distance and, move straight. That means the more the cluster, when price is going to move, is going to move higher. So when I have cluster here, it's good. It's liquidity gathering. Price is gathering here. It's like cloud is gathering, it's about to rain, the cloud is gathering. The more the cloud gathers, when it wants to rain, the possibility that it will rain for a longer, or the rain will be very heavy. If it will rain for a short while, it will rain heavily in a short while, and before you know, flood everywhere. Or it takes its time and rain for a long period of time, for several hours. All right. So let's just look at price in that same dimension. It's streaming live on YouTube right now. You can look at Rally Trade on YouTube. Just join YouTube, Rally Trade. See the same video. You can rewind, and so now back to my explanation. It means I am always looking for areas where there are clusters. So I need price to come back to that area of cluster. Once it can get there, that is where there's a lot of liquidity. Somewhere like here. Like here. There's a lot of liquidity here. All right. So if I find that the next day, which starts from here, price close here on the previous day, and it will start the following day. So price will close here on the previous day. The line starts another day. The line starts another day. So price will close somewhere around here for today. By tomorrow, it will start on the line and continue. Right. So that's how it is. Now, on the following day, if sometimes it might be very close, sometimes it might be far. I need price to price just came inside of this cluster. So if I extend this cluster to the future, you will see what I'm talking about. Price opened very close and immediately tapped into the cluster. What happens? It started building momentum to go up. Now, the candles are small candles. And when price broke out, what happened? Broke out to the upside massively and it kept going. All right. So here also, a little cluster just before price closed. And when the following day happened, same on the cluster, there's already liquidity. Price just gathered some liquidity and pulled up. Now, the third day also, look at where there are clusters. But unfortunately, price opened and just opened here very high. And instead of it to come down, it didn't come down, just kept going up, which is an anomaly. I need liquidity to buy. It means I'm staying out of the market, right? Price tried reaching out to that liquidity. So price cannot keep going like that. No, it will fall back to tap into that liquidity zone before going higher. Now, this one came very close. It didn't get there. All right. So it's either you're a risk taker, you want to take it before it, or you wait here, which means you're not taking any trade. Now, for today, I can see some liquidity from yesterday gathered around here, right? That means I have extended it into today. I'm expecting price to do what? Tap into my liquidity. Now, when price is going to tap into my liquidity, when is it going to happen? I don't know. It could have happened immediately price open, tap into it, and you would have been seeing a bullish move right now. It can be this afternoon, it can be this morning, whenever. So it means that precision, remember I said precision, timing, all right? Or exactly where to buy. So two things I can do. I can either set a pending order around this zone to enter a buy if price taps into this place for me. If I know that I'm busy, I can't be watching, price. So for me to buy, I need price to fall. When will price fall? I can't tell. Will it keep going up? Maybe. All right. So yours is react to what the market does. If it falls down here, then you buy. Right. So that's the explanation that we have. Direction determines either the price will go up or down. Please, this video. Okay. Okay. And the link will be dropped here. So we need the link for Rally Trade YouTube. Rally Trade YouTube. We need the link. All right. So the link will be dropped here. All right, just hold on. Before we end the session, the link will drop. Now, this is good. That means we're only buying when price taps into here. And now the reason why I'm not giving you a sell trade is because we are not expecting price to sell. Price is still on a bullish run. It's still very much on a bullish run. Selling is risky. Buying is better. But I can't buy from anywhere. I need to find out where to buy. Here's the best place to actually buy gold for today. All right. So you can as well have your pending order around here. You can have your stop loss even somewhere slightly below where price closed yesterday, slightly below where price. So this was where price ended, the lowest part, the low of yesterday. So you can have your stop loss somewhere, around here. Okay. Then let me shift it down a bit. You can have your stop loss somewhere around here. So now with this kind of analysis, you are confident about your trade. So you are not scared. Even if you see price coming down and gets here, you're not scared. Right? You're not scared. You can even tap outside and you just see a massive rejection. Okay. All right. So this is the link to Rally Trade's YouTube right now. So you have the link there. So let's go to our Euro USD and the likes of them. Now, Euro USD. So what are we expecting for today? So first of all, I go to my daily time frame. Now, what is the current trend of my daily time frame? Is it bullish or bearish? Bullish or bearish, guys? I need your answer. Bullish or bearish? Is price bullish or is it bearish?
It's bearish.
Okay. Thank you. Thank you. All right. So, but please, let's not unmute. Let's just have a, can just drop a yes or no on the chat box. All right. Thank you so much. Good. Now, price is bearish, ranging bearish, ranging bearish, is actually bearish. Bearish. All right. Now, this is daily time frame, not, this is daily time frame. On a daily time frame, price can alternate its trend. You can see bullish, you can see bearish, bullish, bearish, bullish. Now, it's doing what? Bearish. Now, for those who don't know, price will keep being bearish until possibly when it gets here. Something like this. This is a daily time frame. Let's say, so until price gets to this particular level, let me pick this level. Until price gets to this level. All right, which price is almost there right now. So if I go back to my lower time frame, which is H1, price is almost at that level that I'm expecting that bearishness to stop. Because the last time price was bearish, coming down like this, the last time, this was where it stopped and it started being bullish, isn't it? So I am predicting that, all right, price being bearish for a while now, again, it might get to that same point and reverse again and being bullish. So I'm still considering price as being bearish. It means I'm looking out for what? A sell, isn't it? Now, if I'm looking out for a sell, I need to look for where there is liquidity, true or false? Yes, I need liquidity to continue to sell. Now, where am I going to have my liquidity for today? Where am I going to have it? I look at yesterday's movement. This was yesterday's movement, massive movement. All right. Now, let's even check yesterday. What happened yesterday? So you notice that price opened, came down. Bearish means price wants to go down. But before it goes down, it must first of all do what? Go up. Now, so some people saying this will be deceived. It needs to return first. Return to where? To pick liquidity, right? To pick liquidity. There was liquidity here just before price closed. Just before price closed on that day, there was liquidity. That was why when price opened the following day, it opened around liquidity and it just kept going down, isn't it? But it needs to go back and pick more liquidity. It has exhausted the orders there, right? It's like someone places a demand. You go and look for it. You're a contractor. I sell rice. Someone comes and places a demand for 500 bags of rice. I don't have that in stock. So I will need to go and get the order, fulfill that order, and wait for the next order again. All right. So that's how price does. That's how it moves. It gets massive orders, try to fulfill the orders, and this is the pattern it fulfills the orders. So it fulfilled this order here, but it needs more order. It has been exhausted. It needs more. So price went up in search of liquidity. In search of what? Liquidity. Now, the overall direction is where? It needs to go down, isn't it? But it needs liquidity for it to do that. Now, when price started going up, where did you find liquidity? You can see another small cluster here. Whenever you see candle range, even if it's 2, 3, 4, 5, there is some liquidity there. Now, guess what? If I extend it to the future, you'll notice that price tapped into that liquidity. And what happened? It started tumbling again. Couldn't go above it. Couldn't go above it. Now, for today, for today now, let me bring it forward. So, okay, the following day rather, you can see a bit of cluster just before price closed. A bit of cluster before price closed. Now, when price opened the following day, what happened? It has already gathered small liquidity before it closed. It just started tumbling down. That means it has fulfilled that particular order for that day, right? Now, just before price closed yesterday also, let me bring this here. Just before price closed yesterday, do you notice small liquidity? Do you notice some liquidity? Do you? All right. I think this counts as some liquidity for us, isn't it? Now, it contains candles that are not massive. They are not big. They are small, small, short, and they are ranging up, down, up, down, up, down. You can easily, put them in a small box in a range, right? Now, we had small liquidity before market close yesterday, isn't it? That explains why immediately price opened today, price started going down. So my summation, price does not just move randomly. There is a reason for every move price makes. Your job is to find out why is price going in this direction. Please, do I have audio now? I didn't see this earlier. Is audio back? Audio, I need audio, please. I need audio. Do I have audio? Can you guys hear me? Okay, good. All right, thank you. Okay, so that means price is looking for liquidity, and there are 2 points that they are liquidity right now. The first one is here from yesterday, which is here. So I extend it over here right now, isn't it? So that means price tap from that liquidity, come all the way, is outside of the liquidity. But it cannot keep going down. I'm noticing that it has come back inside my liquidity zone, but it's not at the extreme end. So 2 things can happen. Price coming back inside my liquidity zone here, and doing what again? Falling. Abi? Falling. Keeps going down. Now, there's an alternative scenario to this. If you remember from our forest factory, there's a fundamental for euro, which is going to last for all day, right? Good. Now, if that is the case, that means the fundamental can push price in any other direction. Now, if price mistakenly breaks this my liquidity zone and it keeps going up, where do you think price will get to again and it will stop and it will continue falling? Where do you think that will happen? Where do you think that will happen? So this is where I need somebody to answer me. If you want to, I can unmute, you can unmute and answer this one. Price possibly can break this liquidity, especially because the fact that I noticed that after getting to liquidity, it didn't go very far. Now price is tapping into it again. Alternatively, if it breaks this liquidity, where next will it get to and start falling again? Where is the next liquidity?
Next liquidity is hello.
Yes.
I said
yes.
next liquidity is just after the long candle, the next red candle. After this long one.
Is it this one? After
No,
this one, is it this one?
After this one, yes, somewhere here, yes.
Okay, somewhere there, right? Okay.
Yes.
So that means something like this. This cluster, this massive cluster here.
Exactly.
Am I right?
Yes.
Yes.
Exactly. You get the point now. That means don't be surprised if you see price moving up. Let me take this one out. You can see price moving up. So if it breaks it, it's going all the way. Where is it coming to? It's coming to this hour. Because for yesterday, we did not have one liquidity. We had 2, which was here, 1. And price, after picking it, it fell all the way to this point. It just has small liquidity before it closed. So price has exhausted that liquidity. So it's looking for another liquidity, more liquidity. So for it to get that, it needs to go all the way here. So if price can get here, what do you think will happen? What do you think will happen?
It will fall down again.
Exactly. Fall down again. I can fall back here or even go way more. Way more. And if you study your chart very well, you will find so many scenarios where such things have happened. Sometimes if you don't know where to look, or if you don't know what you are looking for, you might be so confused. So I've given you a hint on what to look out for. Hence, you should not be as confused again, right? So that means we are going to have a pending order which is massive all the way here. But one thing I can assure you is if price can mistakenly get here, the rate at which it will fall 2 ways. Either it will fall very fast, something like this, or it keeps falling gradually but consistently keeps going down, consistently going down, consistently going down, right? So either ways, we stand a chance of a higher profitability. So this is where I can have my 3-to-1 risk to reward, whatever, because if I have my pending order here, I can have my stop loss somewhere above the high of the previous day, which is something like this. Some people prefer 20 pips, 25 pips, 30 pips stop loss, whatever you want to do. But I prefer at the close after the high of the previous day, which is, this was the high of the previous day. So I want to push it slightly above it. Okay. So that means if I'm taking order here, my stop loss is here, and my TP can be somewhere back at this liquidity here at the start of it. It means that I stand a chance of getting 3 times what I am willing to lose. All right. So I can have like a 3-to-1 risk to reward ratio like that. So this is a high profitability trading. The next ranging zone towards 50 EMA. Okay. Price can get to 1.07875. Somewhere 0.78 is somewhere around here, right? Yes, it can. It can get to 1.0797. Well, it can, but anywhere around this zone, price is bound to tumble down. Right? Price is bound to tumble down, right? The next cluster, Kenny. Thank you. Now you are all right. You are all right. But one thing I can assure you is that before price can break out of this current liquidity, it's going to struggle. Yes, it's going to struggle. Now, what do I mean? For those who use currency strength meter, like I have one here, you can see Euro and USD. Euro is 49%, USD is 39%, or it's even falling 37%, and this one is even increasing 51%. Now, you might be asking that since Euro is stronger than USD, and this is Euro USD, Euro is the base, it's supposed to just be going up now. Why is it slowing down? Why is it not moving up? It cannot move up because it's an area of liquidity. No matter how much you are in a hurry, once you enter hold up, even if your destination is far, you cannot go as fast as you were going before. You will have to clear out of the hold up before you can move faster. That is what is happening right here. So this is a hold up. Even though if price will go all the way here, there is a current hold up here, which price must navigate, which can take a while. But once it navigates, through and through before it gets here. All right. So that's why price is slowing down. So sometimes I find out people ask me, oh, look at this, or people who use, let me go back to this, livechart.co.uk. If you don't have that, you can still check the strength of currencies. Livechart.co.uk, you come and click currency strength meter. Can you see my chart? You can't see my currency strength meter. And let me do this. Okay. All right. Now I can see. Should be able to see this. I'm trying to show you. No, not Forex Factory. Okay. Sorry. Sorry. Okay. All right. This is my livechat.co.uk, right? Now, so you can also please help drop the link, livechat.co.uk. We'll drop the link. But once you click it, it gives you the strength of currencies. All right. So you can see now that Euro is stronger than the USD. And apart from Norwegian krona and Denmark krona, which are not major currencies, you can see AUD is like the strongest, right now. Let me confirm that. Yes, AUD is like the strongest right now. Okay. So now, guys, I'm back on my chart, right? Okay, so this explains why some of the things you see, you're welcome, and Felix, you're welcome. Because some of the things you see, this explains them. So price does not move randomly. Apart from times where you have fundamentals, okay, that can just, fundamentals don't respect support resistance. They can just pull at any direction, except periods like that. Most often than not, price obeys certain laws. I'm just giving you one of those laws. One of those laws. All right. Segment on my MT4. Segment, that means daily like this lines here, right? So just click Control Y. Hold down Control, then click Y. Hold Control, then click Y. So you see it's called period separator. You can see different days. Days where you have two lines on currencies are days like Mondays. So Mondays always start with two lines. Okay, two lines. All right. So let's move on to the next instrument. Someone said US 100. US 100. Wow. US 100. Now this is US 100. Control Y, yes, Control Y. So first of all, I need to find my directional bias, which is the current trend on my daily time frame. Now, on my daily time frame, this is looking like it has been bullish for a long time. But it looks like my bullish run is currently because for a number of days now, the candles have been closing bearish, but they are not convincing. But you can see like a range. There's a range. This strategy works well where you have a clearly defined trend. This is a daily time frame, not H1. On my daily, if I come back now, you can see that the whole of this area is a range. Is a range. Any price now in a range, there are two ways to trade it. Clearly, support and resistance might work, but the problem is you never can tell when price will break out of your support or your resistance, isn't it? So let me show us another technique to trading. Why this kind of so possibly the bullish run might be ending. So we are having a range. That means our supply demand zone can possibly work. Where is my insert? Sorry, supply demand zone, which is I have my resistance, more of my resistance here. This is just like an outlier. I have my resistance at this level here. Okay, I have my resistance. So let me even extend it to today. So let's see what will possibly happen. This is my resistance and as well as my support. I don't want to bore us with certain terminologies and the likes, but let's just flow with what we are seeing right now. Okay, still at the support zone. So I just want to capture everything. Now, my resistance level is still fairly small. My support is a bit wide. Okay, so now I am trying to know if I am to buy or sell for today. Now, guess what? Price is closer to my support, right, than my resistance. In fact, it's tapping into my support zone. So two things. Price can respect my support zone. The only problem I have is my support zone is wide, is wider than my resistance. It means that price still has the ability to pull slightly down, maybe here or even here, or might sweep out some liquidity before price even finally tumble up. You know, maybe at 2150 moving average or possibly even breaking it and going back all the way to this point, especially where we have fair value gap for price to cover. So do we have any fair value gap for price to cover? No. From yesterday? No, we don't. So yes, US 100 today is more bullish, but before you buy, make sure price comes and enters your this zone anywhere from here. We can look out for a buy on US 100, given that price still continues its range. And on my D1 time frame, let me see. On my D1 time frame, coming. So let me take this as a bearish move. You know, price is just range, is not clear. So we cannot really apply 100% what we just talked about to this guy. But let's try and apply it. If it will work, let's try and apply it. This is my H1 time frame, right? So I want to trade today, and I'm looking at the possibility of selling. Because price will be ranging, possibly selling. So price closed at this point. Where is cluster? I don't have cluster from yesterday. The only point I have cluster is at this point. This is where I have cluster. This is where I have liquidity, right? From yesterday. So it means that if I'm going to continue selling, I need to allow price go all the way back here. That's where price will fall massively. If you see price here, guys, anytime you see price here, there's a higher chance that price will fall massively because there's a lot of liquidity around this area. It also coincides with being a resistance level. Okay. All right. So today, right now, price most likely will go up, but before it does, I need it to come down a little bit first before I'll buy, somewhere around this level. So that's what most likely will happen. Then for oil, wow, this guy just keeps going. For oil, let's apply the same principle. On my D1, what do I have? I have a bullish run, right? It means that I'm expecting price to pull up. I have a bullish run. I'm expecting price to keep pulling up. But remember, before price can pull up, it needs liquidity, right? So let's find out, where do we have liquidity from yesterday? We had liquidity from yesterday around, we had some liquidity around here. Sorry, let me mark it again. We had liquidity around here. This cluster zone here, this place here, right? Price range for few hours. 1, 2, 3, 4, 5, 6 hours. It was on the 7th hour price broke out of that particular liquidity zone. And what it wanted to do, wants to cover a 4 hours fair value gap, the fair value gap on a 4-hour time frame. Now, this is not the class for that, right? But just a simple technique. Every day we keep building on our knowledge. So please attend Rally Academy, attend our classes. We give top-notch, superior trading education, right? If you follow our rules, you're going to make a lot of money in the market. It'll be easier. So price peaked. Okay, this is liquidity zone. So price tapped into it back that same yesterday. After I came, swept it. Before it keep going up, it tapped into it, continue. Now, so for today, right, I don't have a clear liquidity from yesterday. I don't have a clear liquidity from yesterday. I don't have a clear cluster from yesterday. I only have the low of yesterday and the high of yesterday. Before price closed yesterday, I don't want to categorize it as, because price was pretty bullish. It's not like a cluster. It wasn't ranging. So I don't want to say it was a liquidity, all right? So I wouldn't want to put it at that. So I can then use yesterday's liquidity here to trade today. It means that anytime today, I'm expecting price to do what? Guys, are you seeing what I'm saying? This was a clear liquidity from yesterday. Sorry, this was a clear liquidity from yesterday, right? There was a cluster. Now, remember that price wants to keep going up, right? Isn't it? So price just came to pick out this cluster 1, 2, 3, 4, 5, 6 from the day before. It came to sweep this liquidity, which it came to do yesterday. And the moment it did that, it just kept going up. It swept it. The moment it did, it kept going up, isn't it? Right? Because when price opened, just went up because small liquidity here just went up, came to tap into it. Go. Now, price has opened for today. Liquidity from yesterday, right? Here. So any day, anytime today, don't be shocked when you see oil just falling and falling and falling. It is coming down to peak liquidity. So it will fall all the way to this point before keep going. If I ask you to buy now, yes, price can keep going up before falling. I don't know when it will fall, or it falls now, then rallies back up again. Okay, so but I would prefer price come to sweep liquidity. I always want to buy liquidity first. Sweep liquidity of yesterday, then we'll continue our bullish momentum. Wow, our time is fast spent. Our time is fast spent. Okay, if you can tell the call the entry because I can't see the chart. Tell you energy. Today is not really for calling of entries. Sorry about that. What I've given to you today is more than entry points. Way more than entry. I'm sure a lot of persons here can agree. Okay, fair value gap. Let me see. Okay, let me explain with this particular. Let me explain. with So a fair value gap is when I have 3 consecutive candles. It doesn't matter if it is bullish or bearish. It doesn't matter if it is bullish or bearish. 3 consecutive candles. Let me zoom in so that we can look at anyone. Okay, so for instance, I have 1, 2, 3. The high of the first one here, 1, Then this first one, the high. The second one, I leave it. Then the low of the third one. This third one, the low. High of the first, if it's bullish, going up, high of the first candle, I leave the middle candle, Then the low of the third candle, which is here, right? High of the first, leave the middle candle, then the low of the third. So inside from here to here is liquidity. Let me take out this one so that you will get it. Sorry, it's fair value gap, rather. Fair value gap. So inside this place, you see this candle here? Each candle should interact with the other candle, next candle. If it fails to, the one after it should come and cover that gap before continuing in that direction. So failure for this candle, then this candle moving up, this candle is supposed to have a wick that comes all the way down to come and touch, as in interact adjacent with the high of this bullish candle, the first one. Failure to do that, it left a fair value gap, this amount of fair value gap around here. It means that for price to keep going up, price must come into that fair value gap, into it to cover it. So it came into it yesterday and continued its bullish momentum. Right? So for today, for instance, fair value gap, it doesn't matter the size of the candle or whatever. So I have the high of this, I'm looking at these three consecutive candles, 1, 2, 3. The high of this first one, then the low of this third one, right? So there's a small fair value gap around this point, which needs to be covered. That means at some point, don't be shocked if you see a bearish candle formed after this one coming, enters this place, you just want to cover the fair value gap. Once it does that, price then can decide to continue going in that same direction. All right. You can decide to cover it and keep going in that same direction. So that's just fair value gap for you. So we'll have detailed class on it. So I think for those in Abuja, we're going to be having a class on imbalance, all right, demand and supply imbalance, which will talk about liquidity, we'll talk about the fair value gap, and it's most likely going to be on this Friday, okay? Not sure if we are going to do it online, but for those in Abuja, be expecting that class. We'll communicate it to you. So our time is fast spent. Now, just apply this same principle on every other thing, and I think we should be fine, all right? Apply the principle on every other thing, and I think we should be fine. So, any other question?
I said, how do you get the high of today and the low of today?
The high of today and the low of today. Today must play out before I have it. I need today to play out completely.
For yesterday, how do you get the high of yesterday and the low of yesterday?
Okay, this was yesterday. You see, this place from here to here was yesterday, right? From here to here was yesterday. Today started here and it's going to end here. So yesterday, the candle that went the lowest, this was it. This candle. And this is the shadow, the wick. This is the lowest part of yesterday. And yesterday, this was the highest point. So let me take this one out. Yesterday, this was the candle that went the highest here. This candle. Okay, so let me take this other one out. So this is how I got the high and the low and the high of yesterday. This is how I got it. So I'm trying to use what happened yesterday, how it played out, to look out for what is going to happen today. So two things I'm looking for. I'm looking for where did I have liquidity yesterday? Where did price gather? Where do I have clusters? I had one here yesterday. So that's why I extended into the future. It means that for price to keep going up today, at some point it will have to come down and pick up the liquidity left off yesterday that was not fully covered from yesterday. It will have to come and pick it. So that's what I'm expecting at some point price to drop. Once it drops, I will continue that buying momentum. So I guess that answers your question, right?
Hello, sir.
Yes.
Please, can you explain the fair value price? What do you call it? Can you explain it again once?
Okay, instead of explaining, why don't you just head over to our YouTube and watch this same video again so you can rewind. I explained it so you can rewind it. and watch it again. So that
Oh,
we'll not just, because we are
okay.
supposed to have ended this meeting since 9, this past 9. The
Okay.
link,
Thank you
the
very much.
link is, the link was just, let me just on YouTube.
Hello, sir.
Yes. Yeah, I can hear you.
Okay, sir. I thank you for your explanation on the fair value gap. I just have a quick question.
You're welcome.
When you want to analyze
Yes.
the fair value gap, do you need to use it on a 1 hour
Yes.
time frame, or you can use it on any time frame?
You can use it on any time frame, but it's better you use it on either 1 hour or 4 hours, but your entry point should be on a lower time frame, like maybe your 15 minutes or even your 5 minutes, your entry point. So if I analyze a fair value gap on a 1 hour time frame, for instance, this one that I'm seeing here, the high of this one and the close of this one, this fair value gap. For me to now take an entry point, I can head to my 15 minutes time frame. So what I mean is, if once this is it on a 15 minutes time frame, once price can touch this, enter this zone, then we'll continue buying. So your entry will be much more accurate on your 15 minutes time frame. Okay, so I know, like I said, I didn't do a session on fair value gap. This was just a bypass, right? Okay.
Thank you, sir.
You're welcome. Okay, this today. Thank you. All right. Thank you very much.
Sorry, one more question, sir.
Roderick.
Hello,
I get
sir.
your message. Yes, please.
As I said, so you combine the fair value gap with the cluster which you mentioned today is combined. Is that what you're saying?
Not necessarily. Fair value gaps can happen at any time. If you have it, then you use it. At the same time, my fair value gap is somewhere around here, right? But my liquidity is here. So it means, which one should I use?
Yes, which one?
Yes, for overall, the liquidity is still the strongest. Fair value gap can be temporary, shorter moves, but liquidity is the more solid and longer move. So this is what I would rely on. So it means that price can tap into this place, just go up small, but later still fall down to this. But once it falls to this place, when it starts pulling up, it can keep pulling up massively. So it can be combined.
Okay, so then you can do the fair value gap, then do the liquidity again at the same time.
You can. You might not have fair value gap, but you might only have liquidity. Yes, liquidity is more constant. Fair value gap is not constant. Right.
Okay. Thank you.
So thank you very much for your time. Thank you for your patience. Please contact your account managers. I think we are still running some of our bonuses, right? So you can still maximize it. Fund your accounts, trade using these strategies, and make your profit. Adesola, can I take your question? Please, just 30 seconds. 30 seconds. Yes, please go ahead.
All right. Thank you. Sorry, I just want to know, what is fair value gap?
Okay, that's a very good question. And I think your question will be best answered when you head over to our YouTube and you listen to how I explained it. Just go to the YouTube. I dropped the link. It's on the chat box. Yes, you can see the link there. Just head over to our YouTube, rewind and watch this whole session from beginning to end, and you will get everything you missed. All right. Thank you very much for your time, all. I wish you a wonderful trading day. See you later in the afternoon.